What is a bull market? Imagine a strong bull, charging forward with energy and determination. That's the image of a bull market. It's a period where optimism reigns supreme. It describes a period in the stock market where prices are rising, or expected to rise, over a sustained period. This can last for months or even years. Investors are optimistic, eager to buy, and the economy is often doing well. This positive sentiment fuels further growth. It's the opposite of a bear market, where prices fall and pessimism takes hold. Bull markets are characterized by confidence and growth. Companies expand, jobs are created, and consumer spending increases. It's like a rising tide, lifting most boats in the market. Everyone benefits from the upward momentum, creating a cycle of prosperity. The mechanics of a bullish run. What fuels this powerful market force? Several factors can contribute. A strong economy, with low unemployment and high consumer spending, often underpins a bull market. Favorable government policies, like low interest rates, can also encourage investment and growth. Technological innovation, creating new industries and opportunities, can spark bull market runs. Investor psychology plays a crucial role too. Confidence breeds more confidence. As share prices climb, investors become more optimistic, further fueling the upward trend. Roaring success, bull markets in history. History offers compelling examples of bull markets in action, showcasing periods where stock prices surged and investor confidence soared. The 1990s saw a remarkable bull run fueled by the dot-com boom, where technology stocks skyrocketed and new internet companies emerged almost daily. From 1982 to 2000, the US stock market experienced an unprecedented period of growth, known as the Great Moderation. This era was characterized by stable economic growth, low inflation, and a booming stock market. More recently, the market recovery following the 2008 financial crisis marked another significant bull market. This recovery was driven by government interventions, corporate resilience, and renewed investor optimism. These periods illustrate the potential of bull markets to generate substantial returns for investors, often leading to significant wealth creation and economic prosperity. They also demonstrate how economic expansion, innovation, and investor sentiment can combine to create a powerful upward force, driving markets to new heights and fostering a sense of optimism and opportunity. Even if you're not a Wall Street whiz, bull markets matter. They are periods when stock prices are rising and investor confidence is high. They impact your pension, investments, and the broader economy. Your retirement savings can grow significantly during these times. When the stock market performs well, businesses grow, creating jobs and boosting economic prosperity. Companies can expand, hire more employees, and invest in new projects. This can lead to higher wages, increased consumer spending, and a general sense of financial well-being. People feel more confident about their financial future. Understanding bull markets can empower you to make informed investment decisions. Knowledge about market trends can help you strategize better. By recognizing the signs of a bull market, you can potentially capitalize on the upward trend. This means you might see higher returns on your investments. However, it's crucial to remember that investing always carries risks. Market conditions can change rapidly, and it's important to stay informed and cautious. While bull markets present exciting opportunities, it's essential to approach them with a balanced perspective. No bull market lasts forever. Market cycles are a natural part of the financial landscape. It's crucial to invest wisely, diversify your portfolio, and avoid making rash decisions based solely on market sentiment. Seeking advice from a financial advisor can be invaluable in navigating market fluctuations. Remember, investing is a long game. Focus on long-term goals rather than trying to time the market. Understanding bull markets is a key step in taking control of your financial future. By grasping the fundamentals of market cycles, you can make more informed decisions about your investments and savings. Remember, knowledge is power. The more you learn about finance, the better equipped you'll be to navigate the complexities of the market and work towards your financial goals. Whether you're a seasoned investor or just starting out, embracing a lifelong learning approach to finance will serve you well.